Thank you. Please sit down. Morning. No. Good morning, and welcome to the Reserve Bank. Today, on the basis of an assessment of the current and evolving macroeconomic situation, we've decided to increase the policy repo rate under the Liquidity Adjustment Facility by 25 basis points to 8%. Let me first address the balance of risks that confront us in the evolving macroeconomic outlook. The slowdown in the economy is getting increasingly worrisome. Our current assessment is that growth is likely to lose momentum in Q3 of 2013-14, with industrial activity in contractionary mode, mainly on account of manufacturing. Lead indicators of services also suggest a subdued outlook, barring some pickup in transport and communication activity. On the other hand, agricultural performance so far has been robust, and the strong pickup in Rabi sowing indicates that this should be sustained. Another silver lining is the significant narrowing of the trade deficit on the back of resilient export growth. The current account deficit for 2013-14 is now expected to be below 2.5% of GDP, as compared with 4.8% in 2012-13. The recent resumption of capital inflows, with some turbulence, should help finance the current account deficit comfortably. Reserves have been rebuilt since September and are expected to increase further as oil marketing companies that have been buying foreign exchange in the market repay the Reserve Bank when their swaps come due. Nevertheless, given the uncertain external environment, the government and the RBI cannot pause in their efforts to ensure fiscal and monetary stability. The gravest risk to the value of the rupee is from CPI inflation, which remains elevated at close to double digits, despite the anticipated disinflation in vegetable and fruit prices. Moreover, inflation excluding food and fuel has also been high, especially in respect of services, indicative of wage pressures and other second-round effects. Elevated levels of inflation erode household budgets and constrict the purchasing power of consumers. This in turn discourages investment and weakens growth. High inflation weakens the rupee. Inflation is also a tax that is grossly inequitable, falling hardest on the very poor. It is only by bringing down inflation to a low and stable level that monetary policy can contribute to reviving consumption and investment in a sustainable way. The so-called trade-off between inflation and growth is a false trade-off in the long run. It is possible, I believe, to bring inflation under control without a substantial sacrifice of short-term growth, provided we do what is necessary and are patient. In the mid-quarter review on December 18, 2013, the policy decision was to wait for more data, and we offered guidance on what we would do contingent on the data. Although headline inflation has fallen significantly with a substantial fall in vegetable prices and is likely to fall some more, CPI inflation excluding food and fuel has remained flat, and WPI inflation excluding food and fuel has risen. Given these data, The increase in the policy rate undertaken today is consistent with the guidance given in the mid-quarter review. Moreover, the Dr. Urjit Patel Committee has indicated a glide path for disinflation that sets an objective of below 8% CPI inflation by January 2015 and below 6% CPI inflation by January 2016. The Reserve Bank's baseline projections set out in the accompanying review of macroeconomic and monetary developments for quarter 3 of 2013-14 indicate that over the ensuing 12-month horizon, and with an unchanged policy stance, there were upside risks to the central forecast of 8%. Accordingly, an increase in the policy rate by 25 basis points that we've announced today is needed to set the economy securely on the recommended disinflationary path. If the disinflationary process evolves according to this baseline projection, we believe that further policy tightening in the near term is not anticipated at this juncture. In fact, if inflation eases at a pace that is faster than we currently anticipate, and that reduction is expected to be sustained, the Reserve Bank will have room to become more accommodative. Of course, the Reserve Bank is fostering growth through steady reforms. For example, last week, cash-settled interest rate futures started trading on various exchanges. We also introduced the 28-day term repo. The enhanced framework for resolution of distressed assets will be operational by April 1st. The recommendations of the Dr. Nachiket More Committee on Financial Inclusion are being examined carefully, as are the recommendations of the Dr. Urjit Patel Committee on Monetary Policy Framework. Finally, on behalf of the Reserve Bank of India, let me wish you all a very happy New Year. Thank you very much. Are the cameras off? Okay.
No, we go by that website clock. No, but that is on IST. You're ready, Imba?
Yes, ma'am.
We'll start.
Okay, I'll put you in the main call. The conference is now being recorded. Ladies and gentlemen, good day and welcome to the Reserve Bank of India Post-Policy Conference Call for media. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference, please signal an operator by pressing star then 0 on your touchtone telephone. Please note that this conference is being recorded. Participants connected to the audio bridge may press star and 1 to ask a question. Participants present in the conference room are requested to use the mic while asking a question. I now hand the conference over to Ms. Alpana Kilawala from RBI. Thank you, and over to you, ma'am.
Thank you very much, Imba. And I'll straight away request Governor to take over.
Well, I don't have any preliminary remarks. I think I made them some time back, so happy to take questions.
Yes, we'll start with Anirudh.
Good afternoon, Governor. Anirudh here from ET Now. I'd like to start by asking you about, of course, the hike that you all have effected, and quite clearly you all have already started targeting the CPI. So I'd just like to understand, firstly, whether you all have already adopted all of the recommendations of the Urjit Patel Committee report, and secondly, if you could, if you could kind of respond to a little bit of the criticism that's come your way from the government in terms of targeting the CPI, and we've seen even the Economic Affairs Secretary talk about how it could be premature to target the CPI, and in terms of also the quality of that data. So just these two questions.
I think the Urjit Patel Committee report is still being studied. And of course, some of the recommendations require both the government as well as the RBI to come on board. And so, as and when we proceed on the recommendations, we will have to have a dialogue with the government on some of those issues. I think as far as today goes, we're taking a piece where the Urjit Patel Committee has done substantial amount of work in talking about a possible disinflationary path that has really it's not directly related to anything like targeting. It's basically saying we need to bring down inflation. I think there would be very little disagreement about that. Clearly, we have made a lot of noises about CPI inflation for some time. I think the RBI has always been focused on both CPI and WPI, but given the fact that CPI has stayed high for a considerable amount of time, and that's what the retail investor, as well as the consumer sees, we have to bring it down. So the Urjit Patel Committee report has given us a time frame, which seems reasonable, in which we can bring it down to something which is more reasonable. And so that aspect clearly is something that I don't think there would be a lot of disagreement about. Now, whether the CPI new has a long history, really when you look at the CPI IW, it often tells the same story as the CPI new. These are different indices of CPI inflation. Over time, we have to figure out how we make the index better. But the fact that the index is not perfect doesn't necessarily say that there's no problem. CPI inflation is high, is too high. We need to bring it down.
Lata, but please use the mic and announce your name.
Okay, Lata Venkatesh, CNBC TV 18. Governor, should we understand, since you said that you're accepting some of the recommendations of the Urjit Patel report, should we accept that inflation targeting will be the way to go? Have you swerved from multi-indicator to single indicator approach? And therefore, where does core CPI figure? I mean, will you look at that number, or will you only look at headline number? What should the market expect you to look at in the days to come?
I love the way you try and put words in my mouth. So I did not say we've accepted inflation targeting. We're looking at it. And remember, the Urjit Patel Committee has recommended flexible medium-term inflation targeting. Dr. Urjit Patel sits with me. We will take a close look at all the recommendations of the committee, and then what we can do alone and we want to do, we will take up. What we want to do and needs the cooperation of the government, we'll take up with the government. So I think it would be premature to say that we move towards inflation targeting. What I think there can be no question about is that we have time and again, it is in our mandate, said that we need to bring inflation down. We've also said, and I think this is quite clear, that the best way for us to sustain growth over the medium term is really to bring inflation down. There is really no trade-off between growth and inflation. That said, we are cognizant of the weak state of the economy, which is why any disinflationary path must take that into account. As I said, the Urjit Patel Committee, based on a fair amount of deliberation and study, has suggested a disinflationary path. What we've said is that seems an appropriate disinflationary path for us to follow, especially since many of our monetary policy department as well as people were involved in that. And so all we're doing is taking that aspect on board and following that path. I've said that based on our models, we look like we should be able to hit when we factor in this rate hike that we've put in place, we should be able to reach the 8% objective by the end of the year, and that's exactly what we're looking for.
No, second question, Lata. We'll come back if necessary. We'll
No, I mean, obviously, core tells us something about the second round effects. We look at all components. Even within core, there are some which we need to pay attention to. For example, some aspects of services, education has been going up quite strongly. So we have to pay attention to all aspects. I think the important point to make is that inflation is not merely food inflation, it is more than that.
May I request questions on this policy? Yes, Ritesh.
Governor, good afternoon. Ritesh here from Z Business. So, last policy when when I asked you a question that, how confident were you of the second half of the growth, that time you had said you were very confident of it. This policy you suggest, and also the recent IIB numbers also suggest the same thing, that the momentum has been lost. Still, you have gone ahead and actually hiked the rates. Plus, the uncertainty in elections also suggests the same thing. So, do we to understand that growth will be a second priority compared to inflation, and that has taken a backseat for now as such?
No, I think you juxtaposing growth versus inflation is a mistake that many people are doing, which I think is incorrect. If we cut policy rates, for example, right now, do you think the banks would go and cut their deposit rate? The deposit rate is high because inflation is high. The customer wants a real rate of return. If you cut policy rates, it's not going to create a immediate reduction in the bank's cost of funds. It's not going to create an immediate filter through into borrowers' cost of funds. It's not going to create immediate demand. So we have to get away from the sense that there is magic to be done without bringing down inflation. Ultimately, the best way we can create growth and sustainable growth is by bringing down inflation. For example, look at weak consumer numbers. Part of that is being driven by high inflation. The high vegetable price inflation cut into people's budgets, and they didn't have money to spend on other things. So this notion somehow that inflation is irrelevant to demand, and that somehow we can have strong demand without bringing down inflation, I think has to be revisited. We don't have magic levers. We have to work at it. I think the message to take away from the RBI policy statement was that we think that with what we've done so far, as well as the relative weak state of the economy, plus the fact that we will see some effects of the stabilization of the exchange rate, that we have confidence we can bring inflation within more tolerable limits over the course of the year. And if we can do that, that will give us some room on the monetary front, which can then be passed through. But first, I think, let's fight the fight that needs to be fought.
Saloni.
Good afternoon, Governor. Saloni here from Bloomberg TV. Sir, two statements I would like you to elaborate upon. One, from the monetary policy document itself. It says that further policy tightening in the near term is not anticipated at this juncture. Going forward, if we see inflation cooling off to the levels that maybe an RBI perceives, do you think that we see maybe say a policy cooling off? Also, the second question is from the macroeconomic document. You have said that going forward, you see muted recovery as far as GDP growth is concerned. Considering the fact that we are entering into an election year, you see that this has to be a prolonged recovery. We will not see the recovery that we anticipate, especially in FY15.
No, look, I think we need to create the environment for the recovery to take place, to be strong. And again, I think inflation is part of that environment. On the issue of policy, I think what we want to do is wait and see how the steps we've taken play out into the inflationary environment. And as I've said in the policy, once we get enough data, we can decide how the course of policy will move. And if in fact disinflation is stronger than we anticipate right now, we will have more room to take action. So let's wait and see. As far as growth goes, I think if we create the environment, and remember the government is also creating the environment, a number of steps recently by the Environment Ministry, before that by the CCI, will all add up together to create stronger growth. So I think that we will wait and watch. I'm not in any way giving up on growth in the coming months as well as the coming quarters. We'll wait and see.
Devina?
Governor Devina from NDTV Profit. Governor, last policy you said you're keeping your status quo because you see the vegetable and fruit prices, which are the key cause of the inflation coming off, which rightfully they have come off. But this time, even after they have come off, we've focused on core inflation now on the CPI side, and you've taken the policy stance that you have. Looking at the fact that the negative output data is acting as a disinflationary measure, and the fact that if at all fiscal cuts do happen, that in its own way will again act as a disinflationary measure. So could this have waited, or it was a stand that you had to take?
No, I'd say again, the decision was closed. Last time it was closed, but we chose to wait. This time it was closed, but we chose to act. So in that sense, you're right that it could have gone the other way. But I think, given that action needs to be taken, this time we saw that some of the noise created by vegetables was taken off. But you still saw that some aspects of inflation were sticky and were not moving. That is suggesting that we probably need a little more medicine. But I think at this point we've injected some medicine, 75 basis points in rate hikes since September. And we have to watch to see how that medicine works, along with, again, the weak state of the economy as well as the stabilization of the rupee. So let's see how it goes. We believe, based on our projections, based on our models, that at this point we think we should be able to hit the 8% based on what we've done. But we have to wait and see. And, this is an inexact process in the best of circumstances. And with global volatility, financial market volatility adding to the noise, as well as domestic, volatility will be there, of course, surrounding the elections. We have to wait and see.
Viren?
गुनावत फ्रॉम आज तक इंडिया टुडे ग्रुप सर, दो सवाल एडवाइजरी जो बैंक नोट्स को लेकर आपने दिया है। पहला सवाल ये कि क्या आरबीआई और इनकम टैक्स डिपार्टमेंट, बिकॉज टारगेट ब्लैक मनी एंड फेक करेंसी को लेकर है, क्या आरबीआई सेंट्रल एजेंसी के साथ इंफॉर्मेशन शेयर करेगी? क्योंकि काफ़ी तादाद में इन 1-2 महीनों में काफ़ी लोग आएंगे जो एक्सचेंज करने के लिए आएंगे, तो क्या इंफॉर्मेशन शेयर होगा? पहला सवाल। दूसरा ये कि फेक नोट स्मगलर्स ये बहुत स्मार्ट है और टेक्नोलॉजी भी काफ़ी बेहतर है उनकी, और जब तक आपका ये एक्सचेंज शुरू होगा 1 अप्रैल 2014, तो क्या आपको नहीं लगता कि जो सिक्योरिटी फीचर्स जिसको लेके आपने ऑलरेडी प्रेस रिलीज और पूरे देश भर में बता दिया है, तो वो अपने नए करेंसी नोट्स ऑलरेडी विद दैट सिक्योरिटी फीचर्स मार्केट में ले आएंगे और आपकी जो पूरा एक स्ट्रैटेजी है उसको फेल कर सकते हैं?
Okay, two things on the note withdrawal. First, it is not intended to get at black money, tax evasion, etc. I'm not saying those are good things. There are other instruments, and those are issues that the government focuses on. This is a technical action in order to withdraw, as you correctly point out, notes that have fewer security features than newer notes. So it is an attempt to reduce the possibility of counterfeiting and give more reliable notes into the hands of the public. And of course, we want to minimize any inconvenience the public has. And if the public had to fear a tremendous amount of bureaucratic hurdles in putting their money back, or that we would involve the income tax authorities, this process would be much less smooth. So there is no plan to do the kinds of things that you've been talking about. That is not to say that we support black money